Well, Tim Murphy, you're the Senior Research Analyst at Morningstar. What's Morningstar's view on the UBS Australian Share Fund?
We have a somewhat mixed view on the UBS Australian Share Fund as a way of getting exposure to Australian equities for investors out there. There's a couple of pros but also a couple of cons that people should consider. One of the key positives for the fund is its performance over time. It's been a good relative performer to the index over time. I stress the word relative because things are obviously mostly negative at the moment, but UBS in the turbulent times of 07 and 08 as this credit crisis has unveiled have done a better job of preserving capital than a lot of other managers out there and the index as a whole. So that's certainly been a positive for investors in the fund. We quite like the valuation discipline process that's behind UBS's strategy, that's sort of consistent with the way that a lot of their teams run money around the world, and it's certainly served UBS well over time in Australia. One of the key issues with the fund, though, is that there's a major upheaval in the portfolio management team back in the middle of 2007, and so some of the longer-term performance numbers have to be put in the perspective of the fact that they weren't achieved by the portfolio manager who's now in charge today. So while it's largely the same process that's in place, it's certainly a new management team that's been running it there for about 18 months now, and they've done a very good job in that 18 months of preserving capital better than a lot of other players in the market and avoiding a lot of the major stock blow-ups that have occurred in the market. And so certainly hats off to them in that regard, but certainly they haven't been proven in their current format over the long term like the predecessor had at that point. And with the portfolio manager who's now in place, he sort of had a mixed track record at his previous fund manager. Where he was in charge of a portfolio there that had mixed success in its time.
So how have those management changes worked in with dealing with the global financial storm we're seeing at the moment?
Yeah, it's certainly been an interesting challenge for UBS to confront those issues. As I said, this happened mid-2007, where the former manager, who was a fairly high-profile name, walked out on the firm, as did a number of other senior members in the team. And so UBS has handled that process fairly well in terms of how they built the team over the sort of subsequent 6 to 12 months. And recruited relatively well with a number of senior hires who in that 12 to 18 month period since then have certainly delivered in that short space of time. Again, I stress in a relative sense they are down, but not by as much as the market, which has been a pretty good reflection of how the team is coming together. But again, just stress that it hasn't been proven over the long term in its current format.
So how has this fund performed over the various time frames we've been through to date?
We're reasonably confident that they will be able to continue to meet their performance objectives going forward, but at the same time stress that we don't have the same level of complete confidence that we probably do in some other preferred managers at this time.
And what's your outlook for Australian equities as far as the UBS fund is concerned?
Sure. Well, I mean, we're somewhat cautious about Australian equities and exposures there. Certainly in the model portfolios that we manage or oversee for our clients, we're shifting at the moment more in favour of international equities rather than Australian equities. For a number of reasons, more broader diversification across various sectors, because the Australian market is quite concentrated in the financials and resources sector, which is an important thing to keep in mind when building an overall portfolio. So.
Moving on now to the BlackRock Global Asset Allocation Fund. What type of fund is this, and what does Morningstar think about it?
First of all, it's a fund that invests across a number of different asset classes. So it has a net position of 60% equities, 40% fixed interest, but it can vary that quite substantially where the manager sees fit. We really like this fund because it's got a manager behind it in Dennis Statman, who's been running an approach like this for over 20 years and has developed a really successful track record in doing it. And that is certainly no mean feat, because there are very few investors or fund managers out there that have really been able to add much value by tactically allocating between different asset classes. But Dennis Statman, in the case of this BlackRock fund, has demonstrated over time that he's been able to shift the portfolio between asset classes often in a timely manner that's added a significant amount of value for clients over a multi-decade period. So that gives us a great degree of confidence that with our portfolio manager still in charge of the fund today, that that will be able to be repeated going forward and deliver a solid outcome for investors.
So you think the BlackRock fund has a greater balance of longevity and experience running in its favour?
Yeah, undoubtedly it's got greater experience with a portfolio manager running that same approach, the same sort of format for a much longer period of time, and giving investors the benefit of exposure that he can choose to dial up and down to various asset classes when he sees fit, which, as I said, there's not many people out there that are good at doing that. We think Dennis Statman's one of those who is quite capable at doing that. The important issue to bear in mind, though, is that it is not a pure equity exposure. You are getting, for the most part, a reasonable chunk of fixed interest exposure as well, and so we classified it more along the lines of a typical balanced fund, comparable to what a typical default superannuation fund might be like in terms of its asset allocation.
So how has the BlackRock fund measured up against its competitors?
It's done very well in a relative sense. Again, in the last year, it's down in negative return in absolute terms. A couple of reasons behind that. It hedges a lot of its international equity exposure, which, given the fall in the Australian dollar in the last year, has not been the right place to be from a currency positioning perspective. But in the context of the longer term outcomes and the positioning and returns that have been achieved, it's certainly delivered for investors globally with this approach for a number of decades now. In Australia, the fund's only been available since 2005, but it's certainly done much better than comparable multi-sector type funds with broad, multiple asset class exposure over the same period.
So if you're an investor in volatile times, how should this fund be used in balancing a portfolio?
I think it's a sort of fund that could, if there's one fund, if an investor just wants to invest in one fund, this is potentially a fund that they could use to do that, because it has broad diversification across a couple of different asset classes, because the manager can shift that allocation within international equities between developed markets or emerging markets. It does take some currency views in there as well. So there's a number of different diversifying risk factors that you're getting by investing in this fund, as opposed to another like the UBS Australian Share Fund, where you're just buying a pure Australian equities exposure. So we think this fund could be used as a standalone fund if an investor wanted just one fund to choose. At the same time, it could also easily form part of a broader, more diversified portfolio as well. So many aspects to how it could be used well.